How's it going, guys? My name is JSE and welcome back to MoneyMetEish. Today I just wanted to give a few alternative thoughts on a company which has had a lot of news and a lot of hype around it lately. It's been making a lot of acquisitions, and that is African Rainbow Capital. This is not a deep dive and stock analysis. We won't be giving any thoughts on whether to buy or sell the company's stock. Instead, it's a look at a huge red flag that I see with this company that a lot of people, especially retail investors, either don't know about or are simply ignoring. This is a special midweek video and is similar to the type of content that I am looking to produce next year, as well as the content that I will be posting exclusively for Patreon members starting from next year once the Patreon is launched. There isn't always time to do an on-camera video for these midweek videos, so I will be playing around with different formats over the next few weeks. Comment your thoughts down below. Now, you might have recently seen a video about ARC on another South African financial education platform's YouTube channel. This is not a hit or response piece, but I saw a few major issues with that video, namely the discount to NAV, the management buying shares, and how they brushed over the management fee structure of the company. In terms of the discount to NAV, there is a massive discount to NAV, but as you will see in this case, it does not automatically mean that there is going to be value unlocked for shareholders. Firstly, the NAV has risen by 174% since the company listed, while the share price has fallen by almost 30% in the same time. And secondly, 85% of ARC's holdings are unlisted and under no obligation to release financial information. So the NAV is determined by the board with very little means for the market to value them, and we will have a look at why that is a problem soon. In terms of management buying shares, the board member mentioned in the aforementioned video has spent a lot of money on shares recently, but he is also a member of the management committee who received 5 billion shares as compensation in the last year. So I wouldn't pin too much emphasis on his acquisition of shares as meaning good things for shareholders. And you'll see why when we get to the management fee structure, and that leads me to the biggest issue with the video, how they brush over the management fee structure of the company as, oh, they get paid, when it is possibly the biggest red flag to investing in this company. So I am going to break down this management fee structure for you and explain to you why I think it is a massive conflict of interest, in my opinion. Before we go any further, I need to make it very clear that none of what is going on and none of what I'm talking about is illegal. Nobody on the board has broken the law, to my knowledge. Some of the situations and ideas that I am going to go over are indeed hypothetical. And I am not a financial advisor, this is all my opinion. The investments made by ARC are managed by a company called UBI, a subsidiary of Patrice Motsepe's Ubuntu Boto. The board member who was mentioned as buying so much stock in the aforementioned video, Johan van Zyl, is the CEO of Ubuntu Boto and a member of the management committee, UBI, getting paid to manage ARC's investments. How this payment structure works is that UBI, aka certain ARC board members, get paid a fee to manage the fund. Great, you gotta pay people for doing work, not a problem. The problem is that their fees are calculated using the intrinsic net asset value, or INAV, of the company, and not the share price or the market cap of the company. UBI gets paid between 1.2 and 1.75% of the intrinsic net asset value of the company's portfolio holdings, depending on how much that INAV is. At current levels, they will be getting roughly 1.5% of the INAV, since the INAV falls between 10 and 15 billion rand. There is also an additional compensation of 16% of the intrinsic portfolio value to be paid to the board in C-class shares, which are freely convertible to A-class shares. This compensation is also dependent on the intrinsic portfolio value, which is determined by the board not being lower than the highest IPV of the previous year. Basically, the fund is not allowed to shrink if you want to get paid. And that is where I see a massive conflict of interest, since a large portion of ARC's investments, roughly 85% of their investments, are private companies, and not listed on any exchanges. They don't need to release any sort of financial documents to the public. Essentially, the board decides how much these assets are worth. Therefore, they decide the NAV and INAV of the company, which is paying them based on having a high INAV. The people who are benefiting directly from having a high NAV are the people who are deciding what the NAV is. As far as I can see, there are no incentives for the board to be reducing the discount to NAV and unlocking value for shareholders, nor are there fees directly linked to the increase in share price as they are at other companies who offer NAV-based compensation like Remgrow. The board's compensation is based on the average NAV over a quarter and paid every 6 months. So they take the NAV at the beginning of the quarter and the NAV at the end of the quarter, they calculate the average, and the remuneration is calculated according to that number. So the board is basically incentivized to go out and spend as much money as possible, acquiring as many assets as possible, and ensuring that the prices that they're paying for these assets are widely publicized, as this grants their valuations credibility. Meanwhile, they might very well be overpaying for assets simply to have a bloated NAV and to be able to get paid higher fees. If I was on the board, and I knew that I would be making 15 million rand from acquiring a company at a billion rand, as opposed to only making 11.2 million for acquiring the same company at 750 million rand, I must admit that I would be rather tempted to be paying the premium, knowing that it's the company's money that I am paying with, and I am getting my fees in cold hard cash or in shares at the end of 6 months. It's not like the company being acquired is going to complain about being bought out at a premium either. You get extra points if the acquisition is reported in news outlets that say that the company has bought an asset for R1 billion. That then makes people assume that the asset is worth at least R1 billion, but the board actually has an incentive to overspend on these types of acquisitions to boost their own income without any regard for shareholder value. A major reason for the rights issue in 2020 was to pay these management fees. And only when the market responded unfavorably did the company backtrack and decide to issue shares to UBI instead. Now, the company has stated recently that it is in discussion with UBI to reassess the fee structure. That was in March of 2021, but firstly, the board of UBI is the ARC Management Committee. That's the same as a criminal being able to act as their own judge. And two, the exact same fee structure was up for approval at the ARC AGM in November without any major changes or amendments being proposed to the remuneration policy. So it clearly can't be that big of a concern to the board. And why would it be? Value is being unlocked, but for the board, not for the shareholders. Like I said before, this video isn't meant as a buy or a sell recommendation, but a reminder that you need to know, really deeply know and understand the companies you own when you are investing in individual companies. It is so easy to get caught up in media hype, even when it is nearly impossible for you, as a retail investor, to assign a value to the non-listed assets. The company has a lot of really exciting investments in its portfolio at the moment, but it is extremely difficult to assign a true value to them. Management is important, and it seems that this management team is very interested in self-enrichment, in my opinion, of course. So, let me know what you think of African Rainbow Capital. Does this information change your thoughts on the company? Do you worry about how much the board is getting paid, or do you feel like the possible access to assets like Rain and Time Bank are just too good to ignore? Let me know in the comments down below. Thanks for watching, guys. If you liked this video, please hit the like button and share it with a friend. This is more of the kind of content that I will be posting exclusively for Patreons. So if you found it helpful, or if you like this kind of video, be sure to check out the MoneyMetEish Patreon page when it launches early next year. Top level Patreons will also get access to the full MoneyMetEish investment library, which is all of the tools we use, all of the access to past, current, and future analysis we do on every single company, as well as getting your name on the end of every MoneyMetEish video. Thanks for watching, and I will see you in the next video.